Hello everyone, welcome to the today's video. Hope you are doing good. In today's lecture, we will discuss why banks fail. So, a lot of you know that a lot of banks throughout the world are failing and going bankrupt also. Today, we will discuss why the main banks are failing. Not the main, every bank can fail, any bank can fail, but what are the main reasons behind the banking system and their loopholes, and why in current scenario a lot of banks in past also banks failed. In today's lecture we will discuss why banks fail. So let's start the lecture. Bank failure is a complex process, involves various factors including economic, financial, regulatory, managerial issues. uh, following are the main five reasons why banks fail. First reason is economic and financial factors. In economic and financial factors, you can see that due to downturn or recession or financial crisis, impact on the bank ability to remain profitable is very hard because it has to meet their financial obligations. If bank has a significant exposure to the risky assets or high risk loans, in layman's terms, then the bank will be vulnerable to the losses and insolvency during the economic downturns. So we have to take care of the economic and financial factors. Second point is the management issues, because management power is an important power part of the any structure. So if the poor management practices are there, like inadequate risk management, oversight, uh, then it will lead bank to the failure. If the example we take that, if bank executive and board members are not properly monitoring or managing the bank risks, then it will lead to the significant losses and financial stability. uh, on the third point is that regulatory and legal factors. In banking sector, regulation is a very important term and legal factors are also there. So regulator oversights and the compliance is essential for ensuring the safety and soundness of the banking system. One has to understand the compliance. We have to compliance is essential ensuring the safety and soundness of the banking system. If the bank fails to comply the regulation or if it face any legal challenges, then bank will be subject to the fines and penalties or other legal actions that can undermine the financial stabilities. Okay, got it. The fourth reason is that liquidity issues. Bank depends on the availability of the liquidity to meet the demand of the depositors and borrowers. So if the bank experiences sudden withdrawal of deposits or is unable to access the funding in the financial market, then it can face the liquidity problem that will lead to the insolvency. So liquidity problem must be taken care of. And fifth main point is that macroeconomic factor like natural disaster, pandemic, geopolitical risk can also lead to the impact on the bank's financial health. These events can lead to the sudden changes in market condition also, which will lead to the economic disruption and other challenges one can face also that affect the bank's ability to remain solvent. So at last we can see that when bank fails, the consequences can be significant, like losses of depositors, shareholders, and creditors, as well as it has the broader financial system effect on the broader financial system. So to prevent the banking failure, regulatory authorities typically employ a range of supervisory tools and measures including the stress testing, capital requirement, and risk-based supervision. So in today's lecture, we learned that why banks fail in layman's term. So this is my first video. Hope I have done the best. I will improve myself day by day. Thank you so much. Like, subscribe the channel. Thank you so much.